The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN Thursday morning, 9:06 a.m. We got some weekly jobless claims this morning, and we got markets in positive territory yet again. Quite a bounce we're getting over the last 2 to 3 days, you could call it. Putting the chart on an S&P, you back it up to a week ago Thursday. I mean, look at this volatility of talk about ebbs and flows, a two-way market, folks, to say the least. We had a low last Friday pre-market of 42.60, folks. And check this out. I mean, you almost have 80 to 100 point swings. Friday, we made it to 43.60. Monday morning, we're back near 42.60. Tuesday, you make it to 43.60. Wednesday morning, you're back to 42.76. And just like that, we're 120 points, folks, above where we're at. You're talking about above where we were last Thursday. We take a look at, and you go back 20 days, 45.29 on September 29th, and we got to back it up a little bit further than that. September 3rd, 45.49. We've now clawed back a decent portion of these losses. You back it up to October 1st, you're talking about a low of 42.60 as I talk about 130 points. Quite the acceleration. Nasdaq 100, pretty similar action. We're going to put it on a 30-minute to go back 10 days. There's volatility from last Thursday to Friday at 14,834. Monday, we're at 14,367, remarkable, but we're now at almost 15,000, folks. We're trading at 14,900. The Dow is up 282 points, 34,572. Again, a two-way market, and we might see this for the foreseeable future as this market tries to digest a little bit of volatility. Bitcoin giving back some of the gains. This thing's been a rocket ship. You back it up to last Wednesday, we were at 40,000. Again, this is a 30-minute chart going back 10 days. We rise overnight, 56,325. I got a story up here this morning we'll talk about. George Soros, he's got Bitcoin. I'm sure he's not the only one as this thing has accelerated higher. Now, crude finally pulling back from some of the acceleration. Talk about a pullback. You almost get a $5 pullback. From the lows early Wednesday of 79.78, you actually touched 75 and got a 74 handle, 74.96. And just like that, though, from 4 a.m. this morning, huge swings when you look at it. You're up more than $2.25 right now, just since 4 a.m., 77.23. Gold contract this morning trading lower by $7. We're back to a 15-minute to see the action on gold. A little bit of volatility between about 17.47 and 17.70. This week so far, we're trading 17.54. You see the sell-off right there, and we jump to notes and bonds. Right now, you're getting a little bit of lower price, higher yield. We got the 10-year. We're pushing 1.56% right now. You're talking about 1.555 to be exact. 1.555. We'll call it 1.56% on the 10-year. We're negative by about 7 ticks, and you see the drop-off going on right now, even since 9 o'clock. We just dropped about 4 ticks in that 10-year. Taking a look at the daily for some context here. Bumping up against some lows. If you remember, we were very comfortable about 1.5% yield for the better part of the early portion of this year, from March until June or July, when things escalated to higher price, and we got a pullback in those yields. But guess what? Just like that, we're at 1.56% in the 10-year. Yields looking to be rising. And we jump over to the volatility index. Talk about sucking out the volatility. Man, I've been talking about it this week. Sustained action above 20 in the VIX, but we're pushing a 19 handle this morning as the market is relentlessly positive, buying that dip. 2001, the low a few minutes ago. We're sitting at 2018 right now in the volatility index. All right, let's jump around to what we have going on this morning. We'll kick it off with Senate poised to pull the nation back from default brink, as they put it. Democrats consider GOP deal for short-term debt limit increase. Basically, this is just going to push things back to the year end. I believe that's going to allow Democrats to use processes that they'd be able to do it themselves. Folks, I'll say it, no matter who's in the White House, you got to pay your bills. I talked about it in my newsletter I put out, Rocket Equities and Options, just a little bit yesterday. I don't really understand this one. And I see it in the den, that's saying, listen, the debt's out of control. Might as well take our lumps now. But I don't think that situation is well thought out when you consider who is holding our debt, because it's not just other people, folks. This is not an exercise in theory. We've purchased things as a country. We've taken out a loan to pay those things. People hold those loans in the form of treasuries, notes, treasuries, bonds, all of the above. There's many children that have, whether it's U.S. savings bonds, whether it's 10-year notes, you got treasuries in your investment portfolio. You own shares of U.S. corporations that have money in U.S. treasuries. All of that stops. So in some cases, we are the ones holding the debt for the country that you'd be arguing that we shouldn't pay to help the country. It's a cascading effect that would be not what any of us want. And so good to see that at least there's a short-term deal, but very unfortunate this has become super political across the board, because if we just destroy our credit rating in the process of not paying out the debt that we've incurred, that is not a theoretical exercise in debt, folks. We almost all own that debt in some portion of investment portfolios, corporate structures, corporate asset sheets, investment balance sheets, etc. So looks to be good there. Initial jobless claims. We got a good number here this morning at 8:30. We're talking about 326,000 initial unemployment claims for regular state programs. That's a low number, folks, a decrease from 38,000 from the prior week. The median estimate was looking for 348, so the trend is to lower numbers there, and the market liking that and continuing to trade higher in a big way. We get the S&Ps right now up 35 points, and you see the action. There's 8:30. We actually spiked to the high of 43.98. We've given up about 9 points now since 43.89 right now in the S&Ps. All right, jumping around to what else we have going on. You have Pfizer submitting their request for emergency authorization for their vaccine, ages 5 to 11. Now, the vaccine makers, man, talk about a pullback. I was looking at Pfizer yesterday. PFE is their symbol. Getting a little bit of a pop today, up 30 cents. This was all but expected. They put in the initial data to the FDA, I think it was a week ago or so, and usually the request follows a week or two after that. You take a look at the daily, though, right? I had a Fibonacci on here. We're looking for 100% retracement, folks. You're down to $42. You were up to 51. This is just from the run we had in July, right? You back things up a little bit further on a 3-year weekly. You were actually down early this year at $33 before that run began. Seems all but natural. This area of consolidation we had for the better part of maybe May, June, and July, Pfizer coming down to that area at $42. Crazy when you think about all the mentions of Pfizer, right? You're basically back to prices you were trading at July of 2019 on that equity. Moderna has pulled back as well. Moderna shares was up to $4.97. Man, quite a week last week for Moderna, right? $3.02 this week. We were up just in September 20th, folks. You were at $450 for Moderna shares. And Moderna looks to be down even another $2 this morning. Now, Merck got the real pop last week on their antiviral pill, and that causing some of the vaccine makers to pull back. But you even see that got a little bit ahead of itself, as this week you have Merck trading from 85 back to 80, putting it back on a 15-minute. There's your pop on Friday. But since this week, it's all been negative action. A little bit of a lift with the market this morning so far for Merck. All right, folks, stay tuned. We'll be coming back. We'll be talking to our man Kevin Hincks from Fast Market, TD Ameritrade Network. We'll be talking a little bit of weekly jobless claims. We'll be talking a little bit of non-farm payroll coming up in less than 24 hours on Friday morning. Stay tuned, folks. We'll be right back.
Golden ratios give shape to everything in our world, represented in the Fibonacci sequence. These special numbers define the patterns that make up our universe. Not even markets can escape the omnipotence of these ratios. Larry Pesavento is a 45-year market veteran who has published nearly a dozen books on the powerful patterns we find in nature and their relationships with the ever-elusive markets. Larry's newsletter, Fibonacci 24/7, will teach you to harness the power of these natural golden ratios in order to create successful trades. Fibonacci 24/7 is designed to teach the tools you need to identify and act on these undeniable and reoccurring patterns. Sign up for Larry's newsletter, Fibonacci 24/7, and you will also receive free access to his trading webinar, Trading Strong Trending Markets. Try out Larry's newsletter risk-free. All of TFNN's newsletters come with a 30-day money-back guarantee. TFNN, educating investors.
What's separating you from the most successful men and women on Wall Street? That's right, information. Having all the information gives us the perspective we need to place the right trades at the right time. The TAS Profile Scanner is the premier market profile-based scanner. Powered by its acclaimed TAS proprietary algorithms, this feature-rich scanner instantly filters over 2,500 plus global financial markets, such as stocks, ETFs, commodities, futures, and Forex. This powerful suite of tools leverages instant trade filtering and strategy formulation to show you emerging trades before they happen. For a limited time, you can save $100 off your first month by using the promo code UPGRADE, and you still get a 30-day money-back guarantee, so you have nothing to risk. Level the playing field with the TAS Profile Scanner, which you can find under the Services tab at TFNN.com. Sign up today.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Welcome back, folks. We the S&P's up 35 points right now. Nasdaq 100 up 135 points. The Dow up 263. All the markets roaring back from some of the losses we've had this week. Let's jump over to our man, Kevin Hincks. Every trading day, folks, 12 noon Eastern time. Fast market on the TD Ameritrade Network. Kevin Hincks, Tom White. New program, new hosts. They're talking defined risk, talking trading, talking options, talking hypothetical trading setups. Kevin Hincks, we got a weekly jobless claims number this morning, and we're waiting for non-farm payrolls tomorrow. Good morning.
Good morning, Tommy O'Brien. Yeah, as we get ready for tomorrow's number, Tommy, today certainly looks like a day where the anticipation is, giving a lot of tailwinds to this market. You've got the jobless claims number, 326, back down to some pretty low levels that we moved off of the last few weeks. So you got crude oil that hit $79.78 and has backed off. We talked about how $80 could bring in some demand destruction. That's brought in some two-way trade. Congress avoiding a default. Pfizer asking the FDA to vaccinate children 5 to 11 years old. A bunch of small good news to start the day, Tommy, ahead of a non-farm payroll and unemployment number tomorrow morning that people are expecting. Expectations are getting a little lofty, right? The consensus is for only 475,000 jobs. Well, we just got 568,000 private payrolls yesterday. So I think some of the anticipation is starting to get a little better ahead of tomorrow's number, Tommy.
You laid it out well, man. A bunch of stories all lining up for a little bit of risk on as some of the variables in the market, as in the risk variables being taken out, at least when you look at the government shutdown. That's a big one. In my opinion, didn't think it was going to happen, but you at least have to price in the possibility with the rhetoric going on. That looks to at least be staved off for a while towards at least the end of the year. Short-term reprieve, but nonetheless. And as you said, Pfizer with their submission for kids 5 to 11. We got 326. We're going to be in the 200s pretty soon, Kevin, which, as you've stated, 250,000 on a weekly jobless claim is kind of just a churn in a healthy economy. So we're almost right back into that number at 326 with everything else going on. Remarkable, the turnaround that we've had the last 3 days in this market, Kevin. We had big sell-offs to kick things off, but the market pretty close to talking about all-time highs. I mean, you have the S&Ps right now basically almost 160 points off of the all-time highs. When you're ahead of an economic number like you have tomorrow, Kevin, and we've seen the VIX actually pull back in a way that we haven't in the last, maybe it's 5, 10, 12 days. We're at about 20 right now in the VIX. As a trader, right, coming into a big economic event like tomorrow, obviously all eyes are going to be on that economic data point, one of the biggest of the month, especially right now with everything going on. What do you look for the day before a day like that, maybe, as you creep into the end of today, waiting for tomorrow's action?
Yeah, I think your mindset going into tomorrow's number should be dry powder and giving yourself the opportunity to be successful, not only today, but tomorrow as well. Yeah, you've got VIX coming down off the 2489 level that it hit, overnight on, between then Friday and Monday. However, it's still at 20. It's still significantly higher than a normal level of implied volatility. So there's still definitely some expectations for movement in the market, Tommy. So, last month's number was a big disappointment. The expectations for this number are 475,000. Is that setting us up for a good day? Yeah, possibly. But then what you want to keep your eye on, if this number comes out good, you want yields to go higher but not spike higher, right? I mean, that would change the outlook of yesterday or tomorrow's number. So, yeah, there's a lot of moving pieces, Tommy, but so far, at least for today, it looks like we have some tailwind going into today's market. But even that, there's a little hesitation going into the open. The E-minis, the Dow futures, the Nasdaq are all off their highs. But as you know, that could change in a couple moments.
Yeah, and you lay it out well, of course, in front of tomorrow's action. We get that number, the VIX sitting at about 20. Oil, quite a pullback, as you said, $5 in like a heartbeat yesterday, and already we're up $2 off of the lows as the volatility continues there. With everything in mind, Kevin, what are you guys going to be talking about today, coming up at 12 noon Eastern time on Fast Market?
As we start to get ready for the Christmas holiday shopping, payment space, Square, PayPal, Visa, everything that you might swipe or log into to pay for things. We're going to cover them all today on Fast Market.
Awesome, man. Square, I mean, all these companies been through the roof, man, but the volatility in some of these companies, man, I mean, Square alone, May, you're trading under 200. You rise to 289. We've already given back $60. We're trading at 239. Overnight alone, Kevin, you're up $7 right now in Square, trading at 246. PayPal, crazy action. Just on Monday alone, you were at 251. Right now, we're trading at 267.40. Well, Kevin, we appreciate the conversation as always, man. We look forward to the program at 12 o'clock today. We'll be watching.
Have a great day, Tommy. Thanks for having me on.
You too, Kevin. Take care, man. Folks, every trading day, outstanding program. Kevin Hincks, Tom White, they've changed times, but they've also mixed things up a bit. You have Kevin and Tom hosting it, getting into more of the nuts and bolts of those hardcore trades that they set up, the hypothetical trade setups, whether you're coming into earnings or just setting it up in general. They teach you how to roll those trades, how to manage those trades, how do you walk out of a bad trade, how do you get out of a good trade. Encourage you to check out the program if you haven't. Outstanding show with Kevin and Tom every day. All right. Let's jump back into this market and see what we have happening in terms of other stories I had up here. So Bitcoin has been on a tear, folks, right? And I think we're going to see more and more of these stories coming out here. In terms of Soros's fund owns Bitcoin, the CEO confirms there. But not a lot is the quote. What is a lot? What is a lot of Bitcoin when each one costs $50,000? I mean, you got 20 Bitcoin, you're at $1 million position, right? I would say that's not a lot. How many do you own? 20? Well, that's not that much. I got 1 million shares of a company. I only got 20 Bitcoins, right? Meanwhile, you got $1 million position because it's $50,000. They went on to explain, that's the CEO, the cryptos have a value of $2 trillion with over 200 million users, stressing those numbers that they are a buyer there, folks. And Bitcoin, man, watch out. I would not be buying right now at 54 to 56,000 when you look at this chart. Quite the acceleration here. We got a 50% pullback from the run we had in July up to the highs we made in September. We just rose over those highs yesterday. Now you got to back things up to see the all-time highs here, but we are pushing this area, folks, okay? And that's where you're going to face some resistance because, yes, you had a high of 65,520, but the market was pumping that up because that's the day the Coinbase went public, okay? So there was a lot of inherent buying by those that benefited from Coinbase going public at a lofty valuation, and they got Bitcoin to an all-time high the day that it went public. Kudos to them. You are back into this area, okay? It doesn't have to be an exact price point, but you are back into this area that Bitcoin was in from about February all the way through May. That's going to be an area of resistance because everybody who was in Bitcoin up at that price level was in a losing position until basically today, yesterday, call it what you want. All right, that's where technicals make sense fundamentally in my mind, folks, right? You say, oh, it's an area of support or resistance. Well, what does that area of support or resistance mean? What that means is you have a level of supply here of people that bought Bitcoin at 56,000, saw it almost get cut in half for a period of almost 2 to 3 months when you were down at 30,000, when things looked pretty dire, and all of a sudden you get it all back over the span of a couple months. That's going to cause some potential selling, maybe a little bit of resistance. Stay tuned, folks. We'll be right back for the open.
Are you having fun trading the markets but having trouble finding like-minded individuals to discuss your trading and investment ideas with? Become an apex predator in the trading markets and join the Tiger's Den Trading Room only at TFNN.com. The Tiger's Den is an exclusive trading room where successful traders from around the world come to exchange trades and ideas. Join the den and surround yourself with the sharpest minds in the trading world. Subscribers to the Tiger's Den are also the first to have their questions answered live on air and can privately chat with our TFNN hosts live during their shows. Interact with other Tigers and Tigresses as they share trading ideas, news analysis, and discuss the market action all trading day. Subscribe to the Tiger's Den risk-free with our 30-day money-back guarantee and become part of the TFNN trading community. TFNN, educating investors.
You could be making money off the stock market. And if you're already making money off the stock market, you could be making a lot more. Check out TFNN and Tiger TV and get expert investing advice to give you the power to control your financial future. Go to TFNN.com and find the newsletter for you. Whether you're into trading gold, metals, futures, currencies, or options, you'll get advice and analysis to help you seriously get ahead. TFNN also features trading services with a 30-day money-back guarantee for new subscribers, as well as TFNN's Tiger Den Trading Room, trading software, and educational webinars for all trading levels. And make sure you check out Tiger TV for free on TFNN.com or TFNN's YouTube channel for live financial content from 8:30 a.m. to 4 p.m. Eastern on market days. Stop watching on the sidelines while other people get rich and become the investor you were born to be. TFNN, educating investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. We got markets open and markets positive territory right where they came into that opening bell. The S&P's up 33 points right now. Quite the resurgence. Just look at where we were yesterday at about 6 a.m. You're trading at 42.70 and change. We're 110 to 120 points higher above that level. This is amazing volatility in both directions in the market, folks. We got the Nasdaq up 104, a little bit of a sell-off from the highs of 14,941. We got the Dow up an even 300 points right now, 34,588, and the Russell getting in on the action as well, up by 20 points right now at 22.31. Jumping over to GM again. So GM had a big surge on Monday when data started to come out in their investor day. They had the investor day yesterday, a little bit of volatility. I want to jump on one thing that they said. Now, we have Uber in my newsletter, Rocket Equities and Options, folks. Uber up another 1.4%. This thing has resurged after trading dramatically lower. Broke out of that downtrend channel on September 21st. I believe they restated their numbers there. Up to 47.74 now. You were38 38.09 handle. I think we had a 30. No, never made it to 37. Yeah, 38.09 and 38.09. Yes, and 38.08 were the two lows from September 15th and 16th. Now, GM here, they look to have 1 million or more self-driving vehicles by 2030. Folks, in a few months, it's going to be 2022. In 8 years, there's going to be millions of self-driving cars on the road. It's really hard to imagine. I'm not sure we'll get there in 8 years, but they're now putting expectations on that portion of their business, which is a material fact. Now, to get into where they said this, okay, you have the Cruise CEO, Dan Amon, showed investors one day a graphic of the company's exponential cruise fleet ramp that showed scaling its operations to 1 million or more vehicles by the end of the decade during an investor event Wednesday for GM. We expect to scale the business rapidly, is what he said. He did not specifically discuss the 2030 target, but a Cruise spokesman confirmed that that's where the company believes it can be. 1 million vehicles on the road in almost 8 years, all self-driving. Now, you get into the numbers of what you deal with when you don't need a driver. Obviously, that's going to decrease the cost. They expect to quickly lower the cost of ride-hailing from about $5 a mile today to $1.50 a mile by removing the driver. You want to be a bull on Uber in the long term, get rid of drivers. Now, the flip side of that, though, is that then Uber has to buy the cars, right? That's why you're probably going to see Tesla come out with a fleet eventually, because they're making the cars. You're seeing GM. They're going to have Cruise, right? It makes sense that the car companies themselves are going to have ride-hailing if they're the ones making the self-driving cars. Because what's the difference? I mean, you make a self-driving car, and then you either sell it to Uber, they put it on the road, and it self-drives and makes money without a driver, or you just make the car yourself and put it on the road. So that's going to happen in the future. But startling when you look at the drop in the price from $5 to $1.50 per mile. $1.50 per mile. Man, you're doing 20-mile trips for $30. That is not bad. And really remarkable when you think about how that changes the landscape of everything, folks. Car ownership is one of the most wasteful things that we do, yet one of the most productive aspects of our life in terms of being able to travel 20, 30, 40, 50, 60, 70 miles for commutes was not something that was even feasible going back 1 to 2 generations. But the amount of money you spend on a vehicle that you use only 1 to 2 hours a day while that vehicle sits there unused 22 hours a day. Meanwhile, you're paying the monthly, whether it's, you pay for it outright, you're paying a lot of money for that asset to sit unused. That is going to change, folks, okay? Because when you have self-driving cars, they're running 24 hours a day, max utilization. That would point to saving some money. On the flip side of that, as a consumer, when you put in the costs of whether it's you add up your monthly payment, you add up how much you spend on gas with crude at $75 to $80 right now, you add up what you pay for insurance, okay? Then you add up service. Then you add up if you get into an accident or something like that. Crazy costs on a long-term basis that this will probably change the way that we live in the next 5 to 10 years, which is crazy that it's coming in a big way. We jump over to Lyft shares. Lyft has gotten a little bit of a lift, not quite the same, no pun intended, as Uber. You're up to 55.02, but GM catching a little bit of a lift as well this week. 1 million cars in 8 years. Really remarkable to see that. And talk about remarkable, folks. This market is not stopping. Looks like they want to get in on the action before tomorrow morning, because we just had the S&Ps on the open spike about 20 points in a heartbeat. We're up to 44.05 right now. All right, let's jump around to what else we got going on. We got earnings coming out. We got Levi out with their earnings beat as new denim styles drive sales growth. Retailer raises the outlook. Look like jeans are going to be back in. Consumer demand picked up during the back-to-school season and got a boost from shoppers looking for the latest denim trends. Although many apparel companies have been hit by global supply chain bottlenecks, Levi has fared well comparatively. I'll get there due to its diversified manufacturing. Not bad when that comes into play. Let's pull up their stock on their numbers first before we get in. There's Levi. You're up about 7% on their numbers. They came out with them last night. You spike higher on those numbers, and you continue higher to 26.02 right now. A little bit of volatility, to say the least, on the open for Levi. Their numbers, they make 48 cents versus 37. Revenue above as well. Net income, $193 million. $10 million hit to its revenue due to supply chain issues. Not bad, $10 million. I mean, you had FedEx coming out with, what was it, $450 million or something like that they had to spend extra because of issues they had. Wholesale revenue grew 45% year over year. Year over year comps not really that important because things were so weird a couple years ago. But here's the deal. Digital transactions, percentages on small numbers can be skewed as well. 76% on a 2-year basis, up 10% year over year. 20% of Levi's total sales. So there you go. At least you get a scope of what they're doing. So what are they pushing out? They're pushing out $1.5 billion, and they're doing 20% of that digitally. So they're doing about $300 million over 90 days on a digital basis. Not bad. Not bad at all. For the fourth quarter, expecting year-over-year revenue growth of 20 to 21%. Basically what the market was looking for the full year earnings of $1.43 to $1.45, and the market was only looking for $1.33. There's the key, because I imagine there is a lot of worry, especially in a company like Levi, of constraints in terms of supply constraints, wages going up, cost of goods going up, hitting earnings, the market. Anytime you're going to get companies, folks, that are going to guide for a fiscal outlook and increase their earnings, I think you're going to be handsomely rewarded in this market, because earnings are the thing that is at stake at a time when you have rising inflationary tendencies, wage issues, getting workers that can do the job back in their saddle, and just getting over whether it's commodity shortages, chip shortages, and the likes, and how that's costing some of these companies money. For instance, taking a look at FedEx, getting a pop today up 1.1%. You really accelerated on Tuesday on FedEx. But, man, you back things up. You got to go all the way back to a 3-year weekly to get a full scope of the run here. Last year, in May, you're trading at 100. You trade up to 319, and just like that, we get back almost 50% of that full run, folks. You're down $100 from the highs we had at 319. FedEx. I pointed this out on my program a couple days ago, I think. I mean, you're back to areas in FedEx that we were trading at 4 years ago. 4 years ago. But that's what's happening when they're spending almost $500 million every 90 days, more than they thought, to run their business. We'll be right back.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back for it, folks. Excuse me. We got the S&P's up 50 points right now, jumping around to some of the other companies with earnings. We got Tilray out with their numbers down about 2.5%. You see the volatility there. The cannabis producer Tilray matched the street forecast for a quarterly loss of 8 cents a share. Revenue short of consensus, though. Jumping around some of the others I've talked about, man, Canopy, they have had some problems, to say the least. Take a look at this chart, folks. Kaboom. Back to the lows. If you're looking to get in that, yeah, you could nibble at it. But, man, I would want to see a bid of something, because this thing has been on a one-way trip to lower prices for the better part of most of 2020, and we're coming into October, almost November right now. What else we got going on? Speaking of cars, Apple plans for cars uses iPhone to control AC, seats, and radio. They got CarPlay they launched in 2014. Amazing, 7 years CarPlay's been in cars. Seems like they're going to work on that technology to allow access functions like climate control, speedometer, radio, and seats using your phone to tie that in. Whether the Apple car is coming or not, we will see. And what else we got? United ramps up domestic schedule to the most flights since the pandemic began, expecting a surge in holiday travel. 3,500 flights, daily domestic flights in December, 91% of what flew in 2019. I mean, we're right there. December action, looking for a big holiday season from the airlines. Let's see how they're all trading this morning on that. Got American. That's the weekly. Let's put it back to a daily. We'll zoom in on the recent action. You're up a bit, but giving back some of the gains. American up about 0.8% right now. Delta shares up barely as well. We'll jump to Boeing. Boeing shares up by about 0.9%. You see Boeing jumping around that bottom trend line we were talking about. Boeing, you put it on a weekly, just skipping around that bottom trend line that takes us from the lows of March at $89 to the lows of October a year ago at about 150, and we're matching that at 227 right now on Boeing. I talked about the channel line in the Qs, folks. You take a look at this. We'll put it back on a daily, and excuse me, I got to go back even more than, let's put a 3-year weekly. Pretty well defined, folks, in a big way. I mean, look at how the Nasdaq 100, the Qs, touches 350 just below this chart. Now we put it on a daily. You're going to see these same trend lines, okay? Again, we come off, whether it was November, where the run really began at 266. We touch a couple lows in March, couple lows in May as well, and we bounce right off of that area. Now, when you zoom in on just a 30-day for the last 10 minutes, look at those lines, folks, and how well the Qs reacted, almost to the tick. I mean, I got to zoom it in. We had a line of about, what is that, 350, 122. Yeah, you had a couple tails get below that middle of the day. That's going back to the 4th. What is that, Monday? Yes, that's Monday's action when we originally sold off. But talk about the early hours of Wednesday, right at that line. So keep your eye on it if you are in the queues at all, because that channel line pretty well defined. The upper boundary, we had a short in my newsletter on the upper boundary, folks. Rocket Equities and Options got some trades there for a short, but pretty remarkable that not only do you match the top portion and trade lower, but you touch the bottom portion and trade higher. Keep your eye on those channels. And ode to our man Bud Rolfs from the past, the Tiger Trading Post. Those channels are powerful stuff, man, in a big way. I heard my dad last night talking to, I think it might have been Frank from Gloucester, talking about those channels. Somebody saying, I just follow those channels. Can't argue with you there, folks. Channels in the market, very powerful when you find them and they stick with them. All right, S&P is trading right at 4,400 right now. Taking a look at commodities. We talked about crude. Jumping over to that crude contract. We're trading at 76.70. A little bit of a give back from the highs we had yesterday of 79.78. But, man, you put this thing on a daily, it is all strength. Yeah, you have a marginal pullback here. Out of curiosity, let's just see what type of a retracement we'd be dealing with in crude. Just the run we had, folks, from August 20th, so you're talking about 6 weeks or so, you could see a 382 retracement back to about $73, and you'd be fine. We made it back to $75 this morning. So you almost got a 382 retracement in about 24 to 48 hours. We're within $2 of that price level, keeping in mind that it's an $18 run from August 20th to where we were just yesterday of 79.78. We jumped to gold. Gold continuing to struggle, man. 1757, just chopping around this bottom area in gold about 1750. We were as high back in early September before the market sold off of 1863. Gold really trading right with the market there, selling off. All right, what other headlines I have up here I want to talk about? Jumping down some of it. What do we got? All right. We'll jump to some of the equities that are moving as well. We got Twitter, positive. The sale of its mobile ad unit to app development toolmaker AppLovin for $1 billion in cash. They purchased that for $350 million in 2013. Interesting. Unloading some of that. Twitter shares, not sure that's given it the full pop. 2.7% though higher. You take a look at Twitter though, right, on a daily basis. Just kind of chopping around, negative action since about July, made a high of $80 all the way back in February, and you're sitting at $62 and change. We talk about Facebook. Facebook shares right now up 1.2%. You look at Facebook, the run begins in March from 250 to 384. We got right almost back to a 50% retracement. The 50% would have been 319.59 in Facebook. You get to 322.70. I was talking about yesterday, interesting article in Bloomberg talking about the NYSE Fang index. That index, consisting of 10 of the biggest tech stocks out there, had pulled back to a record spread since 2018, as in what that means is that the earnings, the forward earnings that those stocks were priced at in the Fang index, okay, which has 10 equities, is at about 27 times next year's earnings. The S&P 500 is at about 20 times. So it's only a 7-point difference between the S&P 500 and the biggest tech stocks out there for the growth that they are being priced at. That is hurt a lot by companies like Alibaba, and there was one other in there. I don't think it was Diddy. I forget what it was. I should know. I'll probably think about it. Two of the Chinese companies that have pulled back dramatically have really brought that index down to 27. But the lowest company out there in the U.S. in that index, Facebook. Now, this might have rose a bit because this was as of yesterday, but you had Facebook actually trading under the S&P 500 earnings, with Facebook at about 19 times future earnings. You're probably up to 20 or 21 because of today and yesterday's action right now. But the S&P has increased as well. But the S&P was at 20 times earnings. Facebook was actually sitting at 19 times earnings, pointing to the market pricing in some potential problems on the horizon for that company. And I would say that they deserve some potential problems on the horizon, folks. I do not think Facebook is good for society, whether that should be part of regulation or not. Get your head out of your phone if possible, folks, especially when it comes to Facebook, because it just fosters discussions that are not good, to put it lightly. We'll leave it at that. I think everybody knows what I mean. It just fosters bad conversations. Okay, let's see what else we got in terms of stocks out there. Costco. They're positive in the pre-market. September comp sales, how about 14.3%? Market was looking for 14.2, but the market liked to take that out of the variable. And look at that pop up, 1.5%, man. Costco, quite a run from $307 in March to $470 recently on their earnings, holding right near those highs of $455 right now. Jumping back to what else we got. Citrix, Looks like they got their CEO stepping down. Yeah, you got Meredith out there with some news. Helen of Troy, Levi, Tilray, and Conagra. They were out with their numbers. CAG is their symbol. Back to a 15-minute. Trades up to 35.20. We're back to 34.49. Decent numbers. 50 cents a share for the quarter, 1 cent above estimate. Revenue came in ahead of forecast as well. That's a company that could really get hit by the earnings in terms of rising costs, inflation, wages, but they beat on earnings and the market rewarding them positive today. Stay tuned, folks. We'll be right back to finish up the show.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Are you looking for a secured investment which pays you on a monthly basis? The Tiger First Mortgage Program may be the program for you. The best rate on a 5-year CD in the country right now, according to Bankrate.com, is paying 1% per year or $1,000 per $100,000 invested. The Tiger First Mortgage Program pays 7% per year, paid monthly, on secured, high-value, buildable properties in St. Petersburg, Florida. The investment is for 4 years, paying 7% per year or $7,000 per $100,000 invested. Your investment is secured by high-value real estate in St. Petersburg, Florida. Your investment can be anywhere from $100,000 to $500,000. Do you want to make $1,000 per year on $100,000 invested or $7,000 per year on a secured Tiger First mortgage? The Tiger First Mortgage Program may be just the program for you. The Tiger First Mortgage Program pays 7% per year, paid monthly. For more information, you can call 877-518-9190. That's 877-518-9190.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. We got the S&Ps right now above 4,400, up 50 points, we'll call it, at 4,403. The Nasdaq 100 up 164. All the markets talking about accelerating higher. We jumped to notes and bonds real quick. We got the 10-year -7 ticks, kind of sitting right where we've been for the better part of the show since 9 o'clock right now. A yield on the 10-year about 1.55, maybe 1.56% as we creep a little bit lower on the price of the 10-year. Jumping around to what else we got going on. If you haven't got your vaccine yet, folks, I encourage you to talk to your healthcare professional. And if it's something that makes sense for you, please get out there and get it. The stories that keep coming out, whether it's talking about, doing it to protect those around you or doing it to protect yourself, long COVID, we're going to be dealing with this in terms of a while. In terms of the heart damage, the numbers in here are pretty stark in terms of people who just had COVID, and then you go out a year from then. The chances of a heart attack, stroke, or other major cardiovascular event in the first 12 months after COVID recovery increase with the severity of the initial illness. They basically looked at 151,000 veterans who survived COVID, and then you compare it to the 3.6 million of their peers who didn't. That was collected from the largest integrated healthcare system in the U.S. Most of the users white and male, so that's what it's going to be applied to, as would make sense, as in limit how generalized the study's findings are to other groups, but regardless, white and male. You're talking about a 39% increase risk of developing heart failure and a 2.2-fold increase in talking about blood clots. You run those numbers, and that works out to an extra 5.8 cases of heart failure or almost 3 cases of pulmonary embolism for every 1,000 people with COVID. That's a stark number, folks. So please, if you're thinking about it still, get out there, get vaccinated, protect yourself and those around you, because the statistics of long COVID and how it affects people going forward is something we're going to be finding out for the foreseeable future, I imagine. Okay, what else we got going on? We'll wrap it up with some of the Fang stocks. Why not? Amazon shares right now surging higher, up 1.6%. Amazon, you want to talk about crazy action. You're up $130 from the lows just yesterday. Microsoft shares right now up 0.5%, $294.58. Take a look at a 3-year weekly, right near all-time highs, man, on Microsoft. Let's finish it up with Google shares. Talk about a good week for Google. We were down at 26.23, and we're ending. Not ending. We got one more day action, but 2,800. Thanks so much, folks. Stay tuned. We got Basil. We got Larry. Fast Market. Steve Rhodes, Dave White, Tom O'Brien this afternoon. Have a great Thursday, everybody.